CEO of Westpac says he expects house prices will fall 10 to 15% over the next 2 years. The financial giant's economists have predicted the housing market is about to enter a correction phase in the coming months. Peter King has joined other bank bosses in talking down the risk of mortgage defaults due to a high interest rate. 70% of Westpac customers are ahead with their repayments, the low unemployment rate cited as a pretty critical reason for that. Well, global markets have fallen sharply over concerns of rising inflation and China's exports slowing. Let's go to Scott Phillips, the Chief Investment Officer at the Motley Fool, for a little more of a look on this. What's driving it beyond that, Scott, and when do you expect it to reverse?
Pete, good morning. And the last question is unanswerable, unfortunately. I wish I had an answer. If I did, I'd be in the Bahamas right now. Look, the challenge, I think, right now for global markets is the things you've just been talking about, inflation, interest rates, global uncertainty in Ukraine and in China. And we know, unfortunately, the good thing about being a bit old is you get to see these things happen time and time and time again. The COVID crash is only just 2 years old, believe it or not. So we were talking about that 24 months ago, and the last one before that, the one before that as well. When markets start to lose their nerve, when they start to panic, when they look around and see everyone else running for the exits as well, that just tends to continue. And so right now, there are only reasons the market's fighting to panic, no reasons for optimism. I think that's a mistake. But as you say, the real question is when does it end? And I don't think we know. With inflation and interest rates still likely to play out, we're going to see higher inflation rates. The US numbers coming out this week. US interest rates, of course, went up 0.5%. They're going to go up more over the next couple of months, as in all likelihood are the Australian interest rates. And in that sort of environment, it's a shoot first, ask questions later kind of circumstance. The market's not sure what to do, what to think, where to go. And when that tends to happen, the sidelines are a safe place for many traders who are running around trying to work out what to sell, when to sell, and how to sell. The rest of us have to just sit there and be buffeted by those unfortunate wins, hoping that it's over soon because it is a painful process. But I'd be very, very surprised. As I've said many times before, the market has always regained and surpassed those previous highs. Might take a while. It might be uncomfortable on the way through. We're in the middle of the storm right now.
Okay, well, you talked about inflation in the early part of your answer there, Scott. Meanwhile, energy prices on the way up?
Yeah, they are. We know that wholesale prices have spiked over the last 6 months. The price resets for retail customers probably July 1 this year. As that comes to pass, even though the wholesale cost of energy production is only 30% of our electricity bills, the size of the wholesale price increases that in some cases have more than doubled are going to be a significant driver of energy prices. So we saw both leaders on Sunday talk about how good they were going to be for electricity prices, as with often things politics. That's wishful thinking and an election campaign statement. Post-election, whoever's in charge is going to have to deal with an environment where prices are going to go up. Again, as I said, those wholesale prices are only 30% of our final bill, but the increase is so significant we have no choice but to pay more for energy in the second half of this year, adding to, as you say, those inflation pressures.
Okay. What came of AGL's shareholder meeting yesterday, Scott?
It's a fascinating one, isn't it? Nothing yet. There is plenty of robust discussion to be had. Mike Cannon-Brookes still campaigning, evoking Star Wars, talking about the Rebel Alliance, and saying, the Rebel Alliance had hope on their side. Meanwhile, obviously pointing out we're trying to paint the Empire, being the AGL board and management. It's going to keep going for a couple of weeks just yet. Still plenty of argy-bargy to come. And this is a real challenge because no one, we're never going to know which is right. We'll see which one wins. Whether that's the right option or not, I don't know. It's convincing from a retail perspective to believe Mike Cannon-Brookes and say, hey, there is going to be two separate businesses if this is spun off, neither of which are going to be big enough or significant enough to make the changes, to fund the changes required. On the other hand, if you look at AGL and say, well, hang on, there's two different groups of assets here. If investors are saying, well, I'd like to be able to price them differently, it makes some sense to spin them off. So from an asset price perspective, the demerger makes a whole lot of sense. If Cannon-Brookes is right, there is not enough financial firepower left to look after either or both of these businesses. It could well be the worst situation of all. So going to be a fascinating one to watch. As I said, we'll see who wins. We won't necessarily see who's right because whoever does win ends up having their plan put in place. We'll never know what the alternative might have brought.
Okay, Scott, good to see you. We'll talk to you again soon.